The Maker protocol, the MKR token, and the DAI stablecoin are going against the flow, which seems to generate trust in the cryptocurrency market. In the weekly time frame, we can clearly see the correction experienced by the token since its all-time high in May 2021. Fast forward to May this year, we can see that it has experienced a decline of 85%. The trend line displays a descending parallel channel or downtrend structure with lower highs and lows. Since April 4th, Maker has replicated the correction of the overall cryptocurrency market and developed 5 bearish candlesticks, reaching the $940 zone. Between May 9th and 15th, we can see that after touching that lower part of the parallel channel, it experiences a significant rebound or a boost. To be precise, a movement of 141%, which is incredibly volatile. With the deployed moving averages, we can see that on December 27th, the 20 and 50 period moving averages crossed each other on the downside. As seen, the price drops below the 20 period moving average in the weekly time frame. The candlestick from May 9th to 15th displays an incredibly important volume input. The reasons behind this volume input will be analysed in the fundamental and on-chain analysis later on, so be sure to stay till the end of the video. The candlestick of the week starting May 9th displays large wicks, and the candlestick's body is able to cover the previous candlestick's body. In other words, engulf the previous weekly candlestick. This, added to the large input volume that week, reveals great buying interest in that zone. But in addition, we can see that it is capable of closing above the $1,400 support. In the current week, we can see a doji candlestick and an indecision candlestick, although we will have to pay attention to the price over the next few days to see what happens. In the daily time frame, we can see that between January and April, a type of lateralization zone was starting to form, a parallel channel where the price distributed itself and converged with the relative strength index. Towards the end of April, the pattern clearly breaks on the downside, crossing the $1,700 support approximately, therefore confirming the continuation trend nature of this type of pattern. The engulfing bearish candlestick from April 26th kicks off the bearish movement in accordance with the rest of the market. But from May 9th to 15th, when Bitcoin continued to drop, Maker carried out a bullish movement. On May 10th, it started that incline with a bullish engulfing candlestick, and on May 11th, we can see that huge hike until reaching $2,200 approximately, followed by a rejection, after which it finally closed at $1,120. And pay attention to the significant volume seen that day, as it is a sign of great volatility. On May 12th, the candlestick opens on the downside, breaking the support, but when it reaches the lower part of the channel, absorption of the price by buyers was seen, leading to a price boost and creating a candlestick with a huge wick in the inferior part that surrounds the previous candlestick. That candlestick closed without leaving a single wick in the superior zone, which reveals a continuation of the bullish movement, reaching a resistance zone of $1,300 to $1,400 approximately. Once again, we saw a continuation with an inverted hammer candlestick, which hints at the possibility of a continuation movement. On May 14th, we saw a full-bodied candlestick, and over the last 4 days, we're observing lateralization bouncing between relevant support and resistance levels. We'll have to wait and see whether they're capable of reaching that resistance zone to continue its bullish movement. With the deployed moving averages, we can see the spike of the candlestick on May 11th reached the 200 period moving average and was automatically rejected. The position or the order of these averages, 200, 100, 50 and 20, reveals the downtrend in the daily time frame. The price remains below the 20 period moving average, after which it manages to break above on May 14th and closes above that average. Now the price sits between the 20 and 50 period averages, and we'll have to wait and see whether the price is able to break the area in which the $1,600 resistance and the 50 period average converge. If that happens, the price could go on to test the $2,000 zone, which converges with a resistance, the 200 period moving average, which will lead in that direction, and the top of the channel. If the price is unable to hold in this area and we see daily closes below the previous candlestick spike, a pullback towards the $1,100 area could occur. The cryptocurrency ranking indicates that over the last 7 days, the price has experienced an increase of almost 20%, placing itself in first position. But let's take a look at what's caused Maker to rank first place in a period in which the entire market trembles due to Terra's crash, amongst other reasons. The first thing we need to know is that the Maker token works as a governance token that allows voting decisions regarding the Maker project, the Maker protocol, a protocol that manages the DAI stablecoin. DAI is a stablecoin backed by crypto assets, which, thanks to this backing system of collateralization, is capable of maintaining parity with the dollar. They are assets deposited by users who mint new DAI, and these guarantees, these collaterals, are deposited in vaults. In the event that the value of these assets falls, the smart contract carries out those guarantees in order to not put the backing of this stablecoin at risk. And the great advantage of DAI is that this stablecoin is over-collateralized. That is, there are enough assets to cover the backing of DAI. But in addition, if the assets in the vault do not guarantee the backing, the protocol issues new Maker tokens to cover the rest, something that increases the total supply of MKR in circulation. As you know, the Terra ecosystem has a decentralized algorithmic stablecoin that has lost its parity against the dollar, and as a result of the USD plummeting, users have taken refuge in DAI, the decentralized and over-collateralized stablecoin that has proved to be capable of maintaining its parity against the dollar. And Maker comes after DAI. In addition, the Maker ecosystem has a lending protocol that has competed directly with one of the main Terra protocols, the Anchor protocol, and is currently one of the second greatest total value locked in the market, following Aave. But if we take a look at on-chain data, we can get a better understanding of why Maker is going against the flow. In this chart, we can see that active addresses have been increasing significantly, which coincides with the price's action. Another important piece of information is the total number of addresses, which has been increasing progressively since May 10th. And most important of all is the number of transactions. On May 11th, we saw a hike in the number of transactions carried out with the Maker token, which was a clear sign of interest in that token. But now, let's take a look at the financing rate. What's this data used for? The financing rate helps us keep the price of perpetual futures at par with the spot price. When the financing rate is positive, long positions pay short positions, and conversely, when the financing rate is negative, short positions pay long positions. On May 9th, this financing rate was negative, which means that there was a greater leverage in short positions, which gave room to open new long positions from that moment on, as we will see in the following chart. On May 11th, we can even see a significant volume that occurred in perpetual futures, reaching $882 million worth of transactions. But MKR's boost can also be explained with the withdrawal of MKRs from exchanges. In this chart, we can also see the significant volume input in exchanges. And here, we can observe that Maker's net position in exchanges reveals great buying and accumulating interest in the token, although this could also mean a moment of speculation due to Terra's project disaster. Here we can see how the level of staking Maker tokens is found below that of May 2021, although the exchange reserves have increased as a result, which isn't a good sign as it could imply that investors are looking to sell their assets. It is worth noting that while these assets are staked in exchanges, it should not be a problem, but as we know, tokens being staked can be discarded at any given moment, so we'll have to wait and look out for the outcome. In short, Maker has managed to go against the flow partly due to the Terra project disaster. But in addition, its stablecoin seems to generate sufficient trust, and its protocol, which was Anchor's competition, also arouses investors' interest. But what about you? Do you think Maker will remain a solid alternative to Terra? Let us know in the comment section below.